Thank you, Shruti. Have a good day. Bye.
From one fundraise to another, two-wheeler financing company Bike Bazaar has raised $10 million from DEG, a Germany-based development finance institution. With this raise, the firm has closed its Series D round with a total equity raise of $30 million. The other investors in the funding round include Women World's Banking Asset Management, Eleva Equity, and Fairing Capital. Bike Bazaar is a two-wheeler life cycle services platform that provides financing for new two-wheelers, electric two-wheelers, and pre-owned two-wheelers. Joining us now to discuss the company's growth blueprint is Srinivas Kantheti, the co-founder and MD of Bike Bazaar. Srinivas, thank you so much for joining us on Startup Street today. Now, you're a two-wheeler marketplace, like I said. Talk to us about the growth that you're seeing. Which segment are you seeing the most amount of traction for?
Thank you, Arundhati. Very happy to be here. And yes, so if you look at us, we have predominantly the entire life cycle of two-wheeler ownership and ridership, right from the vehicle getting financed up to finally the vehicle getting scrapped. Of course, all the pieces are still not built, but predominantly we have a lot of our business coming in financing. And when we started it, it was a second-hand two-wheeler financing, which is what caught our eye because there was nobody in that. Happy to tell you that today we are market leaders there. 25% of our business comes from second-hand two-wheeler financing. Later on, we also got into financing new two-wheelers, mainly in rural areas, where the penetration levels in states like Bihar, Orissa, Rajasthan, UP are very, very low. And that's where I think we have very unique models of collection, etc., which has taken us to a good extent. So today we are about 1,000 crore kind of asset under management by March.
Right.
And out of it, only 2% of it is electric. And that's where we are going to see a huge amount of growth in the next 3 or 4 years' time. Just to put a number, next year we would be doing about 2,000 crore asset under management, and it'll be 24% electric actually. So that's the kind of growth we are looking at. And by FY26, we expect 50% of our 6,500 crore book to be electric.
All right. So a big push there for your electric arm. We're going to discuss that in a little bit more depth. But your financing arm first has disbursed two-wheeler loans of over 3,75,000 till date and a cumulative disbursement of 2,000 crore rupees as of December last year. So talk to us about where you hope to see this by the end of this year and what are your NPAs looking like?
Yeah. So as I said, this year we would be disbursing close to 1,000 odd crores, and out of which most of it is done already. And next year, we're looking at a 2,000 crore disbursement, and by FY26, a 6,500 crore disbursement. Because the book and disbursement are more or less same in this business. The book runs down in 2 year time. It's a short-term loan.
Right.
And NPAs, I think at the peak of COVID, when our NPAs went up to as high as 6%, which still was industry best during that time.
Right.
Today, we are down to about 3.2% NPA. And I believe that this business, if you know how to do it, the NPS can be very much under control.
All right. So 3.2% there. Okay. With this fundraise, you're primarily looking, as you said, to foray into India's rural market. So take us through what your traction has been in these markets.
Yeah. So right from beginning, in fact, 2017, we started second-hand vehicles. 2018, we got into new vehicles. And almost, as I said, 80% of our business comes from rural markets. And the traction has been very good. One of the big advantages, and I have been saying this many a times, that, and in my earlier job at Bajaj also, I knew this, that the credit culture in Bihar is better than the credit culture in Bangalore. You may be shocked about it, but that's our experience. If you have a right product, because a lot of the customers are new to credit, they have no income proof. And also they have very poor banking habits. So your product has to be, catering to these requirements. And on the flip side, the advantages is most of them have their own houses. They have a lot of history in that place, in that town, in that village. And usually they would not default unless, they are under some kind of a stress.
Correct.
So I think this combination is what has worked very well for us. We have a very unique product called direct collection model, wherein we do not even take a bank repayment instrument or a check. And we have very successfully built that model for companies like Hero, for companies like Honda and TVS, actually.
All right. So you're also looking, as you said, to double down on your two-wheeler, on your electric two-wheeler financing by offering products including leasing and rental solutions. So talk to us about the growth you've seen on this front so far. You already gave us what you expected to grow to. And also, what's the road to profitability looking like for you?
Yeah, so I'll answer the last question first. So
Okay.
this quarter will be profitable. We'll break even, and next quarter we'll make a full profit for the year. And we always knew that once we reach a particular size, we'll be profitable because we built for scale right from beginning. This business needs a lot of investment upfront if you have to build for scale, both in technology and in terms of manpower, in terms of management manpower. Now coming to electric, one of the things is that we are looking at the huge 2 million plus, last mile delivery ecosystem. And this is going to actually go to about 4 million in 3 to 4 years' time. And this is where we feel that the government of India, Niti Aayog's project Shunya, wherein they want to get most of these last mile delivery vehicles to become electric, is going to be, very important. And that's a wave that we want to ride along with it.
Right.
One of the things is that pure vanilla financing is not going to work for this product. And I'll not get into details of it.
Yeah.
We all know about the batteries, etc., and all that.
Yeah.
So what is really required is to have a lease kind of a product, wherein the risks of the battery, the risks of other things are taken away from the individual rider, and it comes to a company like us.
All right. So profitability also very close by there. All right, Srinivas, we wish you all the best, and we'll talk to you soon. Thank you so much for joining us on the show today.
Thanks a lot. Thank you.